came to more than was the more than 50% of your income. I can't remember what the scheme was going to be, but the HMRC were going to work it out by the middle of May and just pay it to people from June.
Yes, I think it's early June. Yes, and the portal is not open for that yet.
No.
And this is a bit like the furlough scheme. So this will be in addition to tomorrow. Which, because tomorrow is all about borrowing money. It's about actually.
Absolutely. Yeah.
But there is actually a grant for self-employed people.
Yeah.
And all the rules for that are not out there yet. But from memory, I think the maximum amount was based on 2,400 a month, and it was a 3-month one-off payment. Yeah. So the maximum is £7,200 that would be paid to you. Yeah. And that was based on 80% of your monthly income. And the monthly income obviously would be aggregated over the past, averaged over the past 3 years of accounts.
Interesting thing with that one, because my accountant said to me, the one problem you might have is that in the last year, our investment, for me personally, my investment income just outweighed my self-employed income. So I'm hoping that it's going to be the average of 3 years, so that it just clips under. But just have to wait and see.
I can't make the connection though. Why would investment income influence?
The criteria were that you would only be eligible for it if your self-employed income was more than 50% of your total annual income. Yeah, so I'm hoping they do the averaging before they apply that criteria.
Yeah, that's really quite interesting, isn't it? And of course, that investment income, that would be on your personal tax return. You've got 2 buy-to-lets, haven't you?
Yeah, well, no, we've got more than that. We've got 8 actually.
Oh, sorry.
Yeah, yes, it is. Yeah, on the personal tax return. Yeah. So we just have to wait and see. Fingers crossed.
Yeah. But if they average it over 3 years, then it would be less than 50%, basically.
Yeah, it should be. Yeah.
Yeah, I'd be interested to hear more on that, on what your experience is about that. Because
absolutely.
Absolutely. And again, all of these criteria for making decisions in the past seem to have been sort of thrown in the air with this situation. You know, whether or not you would have been better to have gone down a limited company route and so on and so forth. You know. Hi, Renee. Where are you coming to us from? Well, I think you need to hold down your keyboard, the space bar on your keyboard. Okay, we'll come back to you when.
Can you hear me?
Yes, I can hear you now. That's good. Hi, Rennie. How are you?
Yeah. Michael Chan from Preston, he recommended me this group, and I don't know, he's not here yet. You know Michael Chan from Preston?
Yeah, I messaged him only this morning. And we have a couple of Preston members. So where are you based, Rennie?
I'm based in Blackpool, but I'm German, and I moved to Blackpool 1.5 years ago, and I have 18-bed HMO in Great Yarmouth, and then here in Blackpool I have 10 holiday flats. So 1 I'm living and 9 I'm letting out. So the income with holiday flats at the moment, it's a nightmare. And in Germany I have another portfolio with commercial properties, a 3-bed multi-let and two shops and a restaurant. And in one shop there's a hairdresser. He can't pay the rent because he's not allowed to open. And next week he can start open with 2 instead of 5 cutting, how you say, seats to cut hairs. I mean.
Where in Germany is that, Rennie?
In Freiburg, in southwest Germany.
Yeah, that's really interesting, actually. That hairdressers are opening next week. Are they already open, or is it just next week?
No, he just started his business, and he wanted to start it 1st of April, but then Corona came and he couldn't open. And then the grants, we received 9,000 grants, 9,000 euros grants, but he is not receiving the grant because on the date of 11th of March, he was not trading. And now he's not getting anything.
So the question is more about the hairdressers. Are hairdressers generally open in Germany at the moment?
They will open from Monday.
From Monday. Okay.
Yes,
Well, I need to get over to Germany.
but they're only allowed to have one place, one working place in 20 square meters, and he has 51 square meters, so he has to close down 3 and can keep only 2. Yeah. And my restaurant in Germany is still doing takeaway, so he could pay the rent. This month I will see. If he wouldn't pay, then I really need mortgage holiday, because it's a very high rent. It's a big building, and so but my HMO is still all right in Great Yarmouth, and my holiday lets, I could even make a little profit in April, because I had so many key workers and builders. But now Airbnb and bookings is completely blocked, and now I have only 2 from 9 flats let.
I think that they're taking bookings from June, aren't they?
They take bookings from the 10th of June, but they will close it again. It's a decision of the government. They blocked it. They enforced to block the bookings.
So with the holiday lets, though, will you be getting £10,000 per unit as a grant?
No, I have 10 units and I get £10,000 per building. So it's one building. So I get only 10,000. And with my other company, I bought a block of 7 flats and I applied for planning permission to convert it into bigger and nicer flats. And the planning was so much delayed, and it came through in the 22nd of March. And I was still waiting for the planning, and now I don't get any grants, because on the 11th of March I was not trading, and on top of this I have to pay the full business rates, because I don't get small business rates release because I'm empty. And now I can't even trade. They ask me for proof of trading from bookings.com or Airbnb, but I can't get bookings. So, and I don't get any grants, and I have the whole liability of the loan to pay. I work with private finance anyway. I can't get a mortgage holiday. So the hotels you can't buy with a mortgage. You must buy cash and refinance after 2 years of trading. So
it does seem very arbitrary, doesn't it? It does seem that, depending on how the dice lands, and what your situation is, you're either going to do well out of this situation for now or very badly. But I'm interested to hear about the hairdressers. We have a beauty aesthetics clinic. I've actually, yesterday I went online and I ordered some greenhouse perspex that you put instead of the glass windows into greenhouses, and the idea being is I'm going to shape those and hang them from the ceiling, in order that people can put their hands underneath the perspex in order to have their nails done, so that there is actually a physical barrier between the practitioner and the customer in order to do the nails.
Now, even if you put plastic barriers between the seats, you're not allowed to have more than 1 person in 20 square meters. So they're very strict.
No, we normally have we have a long station which normally holds 4 people, and we will just have 2, one at either end, and they will be probably 3.5 meters apart. That's, but of course we don't know when we're going to open yet, and I certainly don't think we'll be opening when hairdressers open. I think we'll be later than that, but we just have to wait and see. I popped something on the Facebook this morning. I've just learned this morning that Ireland have announced their plans for relaxing the lockdown. So there's some interesting stuff there to read, which we can take some assumptions from that as to what to expect in England and Wales as well. Morning, Shane. How you doing?
Good morning. How are you?
Yeah, very good. Yeah. Have you been coaching this morning, or have you had a morning off?
No, I've been up to the woods with the boys. Tried to give the mum the morning off, and then I've just made breakfast, and then your turn. Handed the baton over.
Morning, Leticia. How are you?
Good morning. Very good, actually.
Yeah.
Learning a lot, trying to maximize the time, so it's good.
Yeah, you're stuck on your own in central, not central London, but close to central London.
Yeah.
Yeah.
I have a garden, so it's not that bad. If you compare with other people, so it's not. It's good.
Yeah. Rachel, have you got any news?
Come off mute. Nothing really. Busy launching another business, which I was doing anyway, but it's just brought it forward really. And yeah, just really, I can't believe how busy I am, considering we're supposed to be on lockdown. I haven't been out of the house though. Haven't been anywhere other than a dog walk for 6 weeks. So, but other than that, yeah, really busy. I'm doing some online live webinars, some coaching, and our properties, all's good. Nothing's going wrong in the properties at the moment. We've got one that we're ready to refurb, but Andy's furloughed. So he can't start that until lockdown ends and probably mid-June or something. But yeah, so other than that, all good.
Good stuff. Well, I noticed we've got quite a lot of people who are not on video screen. If you click on participants list, you can see their names there. And so we've got 15 people in the room at the moment. And quite a few of them are people who've not been to the Unity Cafe before. We opened the Unity Cafe to the public on a Sunday morning. And I did a bit of sharing around Facebook this morning. So we're probably having a number of people who haven't, who we're meeting for the first time. So hello, everybody. And I suspect one of the reasons that we're getting joined by people is to talk about this thing that opens tomorrow. But before that, one thing that might have slipped people's notice that was announced 2 days ago was to do with people who have property interests, but are not at rateable value, not on rates, but on council tax. And there are the grants that were given to councils to give out to people who have properties that have rateable values have now been increased by the government for the purpose of giving to properties that don't have rates on them. And one of the example businesses is bed and breakfasts. So that brings into question whether or not serviced units, serviced accommodation that is not on rates but is on council tax might be included within that. Again, like all of these things, the amount of information that is actually put out is not totally prescriptive. So it's a case of making the application to your local council and to see whether or not they're going to allow it or not. But what's interesting about this is that instead of being a £10,000 or a £25,000 grant, it's actually a discretionary grant that the council can use their discretion to determine whether or not they're going to give this grant to you. And the value is also discretionary. So basically, if you do have a business, service accommodation or other business that involves a property that has not been eligible for this rates grant, then it's probably worth going back to your council and making your case, because it could be that you'll get a grant for that purpose. It does seem to be, that they've got quite a lot of flexibility, so it may be a case of getting in as early as you can and getting a decent case put together. Renee, maybe your situation, I don't know, but it seems that it's not just a case of straight rules. It's a case of if you put a decent case together, you might actually get lucky and get that grant. Has anybody else read anything?
The planning application, which took much longer than expected, even though there was no objection, they just were lazy and slow. And then I've been waiting for the planning application, and then the date 11th of March, if you're not trading on the day of 11th of March, they don't give you anything. And now I have to pay business rates on top of this. It's horrible.
And this is this is your local council, is it, that you're talking about now?
Yes, yeah, Blackpool Council.
Yeah. So they've increased the funding by 5%. So that's 5% of the 12.3 billion has gone into this new fund for this purpose. So, you know, it's quite a significant amount of money going out to the councils. The additional fund is aimed at small businesses with ongoing fixed property related costs. Ongoing fixed property related costs. Okay, so and then it gives some examples: regular market traders, small charity properties that would meet the criteria for small business rates relief, and bed and breakfasts that pay council tax rather than business rates. So they're looking at the exception here that people are not on business rates, but you know, arguably are business properties, basically. Anybody that falls into that category? I mean, I do. I've got a guest house that I'm going to have a go at.
Sorry, Rupert, I don't personally, but a friend of mine does. She's got holiday properties in Saundersfoot. Yes. That she only started less than a year ago. And because they've not got 2 years accounts, there's nothing else to support them, and they've spent a lot of money getting them up to a very high standard, so they've got nothing. And of course, I said to her, what about letting them out to key workers?
Yeah.
And unfortunately, it's a sad fact of life that in Pembrokeshire, people don't think before they act. So a lot of holiday properties, because we've got a high percentage of properties are turned over to holidays down here. Key workers are in them, and they're having their tyres slashed, they're having paint thrown across their cars because people think that they're holiday makers. So she said, I don't want to go down that road. So do you know what this is actually called, this funding that you're talking about? So
yes, I've popped a link in the chat box. So
okay.
if you look there, there's a few links there, but this is called the Top Up to Local Business Grants Funds Scheme. So it's a bit of a mouthful. Top Up to Local Business Grant Funds Scheme. And that's on the government website.
Be interesting to see whether it's available in Wales, because of course everything operates differently.
Yes, it is slightly different in Wales, isn't it?
Just a bit, yeah. Okay, that's great, thank you.
But businesses must be small, under 50 employees, and must also be able to demonstrate they have seen a significant drop of income due to coronavirus restriction measures. So, you know, there's a question here whether, you know, serviced accommodation, you know, self-catering units would fall into this, but they certainly do mention bed and breakfasts there. So who knows? I personally think it might be one of these cases that one council might say yes, and another council might say no. You know, and certainly as well, the councils have got the discretion to determine how much that they would be giving in these situations. But you know, it's definitely worth a go. And it's kind of slipped. I've not really seen this being headlined. It's only been out a couple of days. So the fact that it hasn't received a great deal of airtime at the moment could be that if you get an email into the council today, who knows, you know, you might be ahead of the queue and be all right on that one.
Rupert, can I just ask a question about that? I just kind of maybe missed a little bit of it, but is the definition that we have to have some fixed cost to be eligible for that grant?
So that was Vinny, wasn't it? Sorry. So the question is, do you have to have fixed costs? Is that what it is?
Yeah, that's right. Yeah. Do we have to? Is that the definition to be eligible for this grant? That we have to have some.
The additional fund is aimed. So I think the word aimed is significant, isn't it? Aimed at small business with ongoing fixed property related costs. So I would suggest that if you're renting a property and you're using that as a holiday cottage, then I would suggest that you've got a fixed property related cost. If you own that property and you have fixed property related costs, don't you? So obviously you'd have your mortgage interest, that would be a fixed property related cost. So yeah, I believe that the holiday industry would probably be influenced here. Obviously a lot of holiday lets in holiday environments are subject to business rates and would have already got the grant. but those that may be, so some situations could be that they're annexed to houses where they're still on council tax. Other situations could be where, you know, they've been taken on more recently, and the businesses started operating more recently, and they haven't got around to actually converting from council tax to small business rates. So where that leaves your service accommodation provider in Nottingham, who knows? My view would be get the email in today, you know, and find out. Any other thoughts, comments on that? Okay. And we've certainly got we've got 18 people on now, so quite a few coming in to talk about this thing tomorrow. So tomorrow, May the 4th, is a date when the government are probably giving away a once in a lifetime loan opportunity that we probably will not see again. It really is quite amazing, really, having read what I have read about it, and it'd be really interesting to see what people's experience is actually going to be as a result of it. If we start at the very high level here, I think it's particularly coincident with announcements that's going to come out next week about the relaxation of the lockdown, and I think that this is a very deliberate move by government under the circumstances. I think it is basically a way of injecting cash into the economy and trying to keep businesses going, but also initiate some stimulus into the economy as well. So I think that there's a dual situation here. One is we don't want businesses to fail. We don't want any more staff to be coming on and going on to universal credit and applying for unemployment benefit. But at the same time, but more than that, we want businesses to start to do business and to get a bit of confidence to do that. So I think this is very, very much a stimulus measure at very high level. And therefore, I think we should avoid this idea, this concept that, you know, under such stressed circumstances, you know, it's only morally correct to apply for this if you absolutely need it. I don't think it's aimed at people who absolutely need it. I actually think all the initiatives aimed at people who absolutely need it have already come out. This is about stimulating the economy. And if we look at other economic stimulus factors or practices that have happened in the past, notably quantitative easing, that introduced liquidity, introduced money into the economy via the stock markets, and there was quite a lot of criticism about that because some people were determining that only about 10% of the money actually filtered through and got into circulation as a result of quantitative easing. There was a big time delay between the injection of quantitative easing and that going into circulation. Whereas with this, it's all about speed. This is all about getting the money into circulation as quickly as possible. And the timing of it, you know, very, very coincident with the fact that we're probably only weeks away from the beginnings of the relaxation there. So I think on a very, very high level, I think that's what's going on here. Now, bringing it down to the individual business, I think it's deliberate that, that they've deliberately scoped the entry criteria as wide as they possibly can. So basically, any small business of any nature appears to be eligible for this loan. They're making use of the same banks that have participated in the CBILS scheme, so they have not had to have any banks gearing up to actually participate. They're already in. And there is definitely a hint that those that have CBILS loans should be looking to convert those loans into what we call BBILS, or the bounce back loan, which comes out tomorrow. So, you know, there's a tacit admittance of failure on the CBILS side, certainly something that we've personally experienced, having put an application in for CBILS many weeks ago and literally had nothing back whatsoever. Although, Rachel, I did get an Experian notification on Thursday to tell me that Santander had looked at my credit record. So that's all they've done in the past sort of 4 weeks, 3 or 4 weeks, with regards to our CBILS application. It does leave us in a little bit of a grey area, a blurred area, because they have said that you can't double up, you can't apply for the business loan, the bounce back loan, if you have a CBILS loan. But they have said that you can convert the CBILS loan into a bounce back loan. The issue being is that the criteria for the value of the loan is different. So with the bounce back loan that opens tomorrow, the maximum you can borrow is per business 50,000, and you can borrow up to 25% of your turnover. Now, our application for CBILS in one of our businesses was approximately 10% of our turnover. So, you know, there's still another 15% that we could potentially apply for. So, you know, the bank's probably going to have to make up their own rules about that, but we'll be applying for the full value that we can tomorrow in that business, and we'll be informing the bank at the same time that we have a CBILS application in, and we'd rather the bounce back application be looked at in preference as far as that's concerned, and we just have to wait and see what the banks have got to say about that. So we're looking at 50. Colin,
I was going to concur that it does say that you cannot have both, but later in the month you can transfer from CBILS to bounce back. And it did say that the rate for bounce back is 2.5%.
Yeah.
And also, the question raised the other day was whether it did say, or the Chancellor did say, that the amount of lending given on these loans will be taken out of the bank's gearing ratios or capital ratios. So, assuming that's the case, then it shouldn't hinder them lending on traditional vehicles.
And as a mortgage broker, that's really important to you. So it's good that you've picked up on that and mentioned it. The other thing that those that are in financial circles might be flagging up here is that some of these loans, particularly if they're to sole traders, would fall under the regulation. And therefore there could be some hoops and hurdles to go through because it's a regulated activity. And the government have actually stated that for this purpose, they are going to change legislation retrospectively to ensure that it's a business-to-business loan and therefore it's not regulated. And the whole purpose of this is to just speed things up and make things as simple as possible. Colin, you mentioned that there's a 2.5% interest rate, and you're absolutely right on this loan. But my understanding is that there's a 0% interest rate for the first 12 months. Is that your understanding? Yeah. Yeah. So basically, this is a loan that will be up to 25% of your turnover. It will be capped at 50,000 per business, and we'll come on to that in a minute because I think that's really quite key. It'll be interest-free for the first year, and it will be capital-free for the first year. In other words, capital repayment-free for the first year. It can be up to 6 years. So if you borrowed the money today, you can then fast forward a year, and then you're looking at 60 monthly repayments of the capital, plus 2.5% interest. So for property investors, that's an unbelievable deal. For the rest of the world, there's probably, they probably think that's about right and about normal, and they might even consider whether it's worth having the cost of the interest or not. But certainly for anybody in property, that's an unbelievable deal, and something that if property investors, if landlords are eligible for this, then what landlord would not take it? That's my view on this. Obviously, it's a loan. It will increase your liabilities, but it will also put cash in your bank at the same time. So there'll be no net change in assets on the day you take the loan. It's what you do with it that requires some level of responsibility, I would say. So that's in a nutshell what the loan is. I'd like to come on to business entity though, because a lot of property, lots of landlords, they structure their affairs across different businesses. So when we're looking at businesses, Dintner has already mentioned that she's got a partnership with her husband. We have what goes on your tax return under sole trader income. And that could be from 4 or 5 different sources of income and 4 or 5 different activities that you do. We also have a different page on your tax return for the investment income, which is what your buy-to-let landlord income is. So assuming, and it is an assumption at this stage, assuming that the investment income is, and the investment activity is within the criteria for giving this loan, then you would add all of that up together from your personal tax return, okay? Regardless of how many activities that you might have to bring in that sole trader income. So you might have some cleaning activities that you do, you might have some commissions coming in or whatever, and they all come into you personally and they go on your personal tax return. That would be one entity, and that would also include your landlord activity as one entity. Now, let's be clear, I'm not making rules here, I'm second guessing from what we've read already and taking an intelligent analysis of what has been stated. So until we make those applications, we can't be certain.
I don't know any different to you, but I interpret it slightly different in that it's a business loan, not a personal loan. So, you know, no business can borrow at 2.5%, I would suggest. So I'd say it's a very good rate. I think it will be linked to accounts, either bank, if we're lucky, bank account turnover for a business or trading accounts for business. I'm not sure tax returns will come into it, but that's just a personal view. Okay,
well, we're yet to see, but I don't think we actually differ there, if I'm honest, from what you've just said, because I agree with you totally. It's all about business income. You know, but if you have a cleaning business, then that's business income. If you're in the business of earning commissions on certain activities, that's business income. And so I've started with the sole trader side of things because that ultimately could be the more complex element of it, because you could have numerous streams of income coming into sole trader activity. But then a lot of businesses also have limited companies, and limited company entity is quite separate from the individual. And I can't see any way that they can actually link a limited company to your sole trader activity when making such decisions. The limited company could be owned by different shareholders, could have different people involved, different directors involved. So each limited company would then have to be looked at as a separate entity. So what I'm seeing here, from what I've read so far, is I'm seeing a £50,000 limit of 25% of your sole trader activity turnover. I'm then seeing added to that a £50,000 limit of 25% of your turnover for each of your limited companies. So if you then add everything together, what you end up with is 25% of your turnover as a maximum you can borrow. But if in any case that goes over 50,000, then that segregation of that turnover into different entities will actually work in your favour as far as that's concerned. Any questions on that?
Yeah, I've got one. But we're talking turnover as opposed to profit, because there's quite a difference.
We are, but I've not seen anything with regard to VAT. So
no, we don't get involved in VAT because my husband worked abroad, thankfully. So, so he was outside the 12-mile limit, thank God.
I mean, when we look at our limited company accounts, you know, the turnover is shown net of VAT, and I would suspect that that's the figure that will be used. So it'll be.
Well, what I'm thinking is that for sole trader and property investment income, obviously, turnover is effectively the gross that comes in. There's a huge difference between that figure and the figure that goes through as taxable accounting on paperwork. So that makes an enormous difference, actually.
So, Dimna, you made a very good point there about what you call the taxable income on a sole trader's point of view and what the turnover is.
Yeah.
They're very clear in what they're saying is they talk about turnover.
Yeah.
Wow. Okay.
Basically, whatever your tax return is, if it's done by accountant, it will be done based on a set of accounts for that business, even in a sole trader's situation.
Yeah.
And that set of accounts will have a much higher figure at the top than the taxable income that's at the bottom.
Absolutely.
So I'd come back to my my best guess on that is that it will be the top line turnover, but perhaps net of any VAT that's being paid.
Yeah. Okay, cool.
Any other questions on that?
Hi, Rupert. David.
Hi.
I've got a question, maybe for you and maybe for Colin. What do you guys think the mortgage lenders will think to these? So if in 3 months' time I apply for another mortgage and they look on my credit file, I've taken 3 bounce back loans, total amount of about 120k. What effect might it have?
I think like any responsible lender, if you've got to repay it, which you have, then that they will take that into account in your repayment ability as a person. The interesting thing is if it's in a limited company and that's ring fenced, and there's another one over here in another limited company, depending on which company you want to borrow out in the future, I don't think it'll have a big impact on investment mortgages and that sort of business purposes. I think what could have an impact on is if you're looking at personal mortgages where you've got a loan in your personal name rather than a limited company.
Interesting. And the way I would answer that, Dave, is to some degree it depends on what you do with it, because the day you get that loan, your net assets haven't changed. But if you're actually then making use of that loan, if you're paying wages for it or using it to gamble on the stock market and making losses there, or if you're using it for Google AdWords to try and generate business income, and that doesn't generate that business income, then obviously your net assets position will change. So when you come to actually make the application for the mortgage, you'll be making it from a weaker position of net assets. So I do think there's an element of it depends what you do with it here. But I think Colin's made a very important point there about if you are borrowing this as a sole trader, and then subsequently you're looking to borrow for a personal house, then it could have a much stronger implication upon things.
Right. So if I find another investment property and apply for a mortgage with Paragon or Kent Reliance, for example, and ask where's the deposit from, I'll say from a bounce back loan.
Well, you could look at it the other way around, of course, Dave, and you could say that your bounce back loan is actually, you know, you're going to take that instead. So, I mean, I've got a situation where Colin and I have been working on trying to find a lender on a secured property worth 175,000. I only wanted 75, and no lender would lend on it because of some technicality on a clause in a lease agreement. You know, and that's been going on for 6 months now. And then all of a sudden the government say, oh, well, they're going to give me 50,000, you know, based on the turnover of my property business. Well, one hopes. And I'm going to really underline that now in case you all come back to me on Tuesday and say, what the hell were you talking about? We are not certain that the banks won't turn around and say, listen, if it's a property business, we're not going to lend on it. We don't know that today. What we do know is that it's not listed as an exclusion. So we can make the assumption that it is included at this point in time. But Dave, yeah, you could, of course, when you went to in 9 months' time, is you could pay back your bounce back loan in full, in capital, and then not have it involved in your mortgage application. So I think you've got options further down the line here.
I think the problem is it's unknown, isn't it? The lenders are already tightening up on furloughed income, on proof of deposit, and they've always been very tight on where that money's come from. And if it's borrowed money, they then delve another layer that you can afford both the new mortgage plus the borrowed money. So if the deposit is in any way linked to a bounce back or CBILS, I guess they'll be looking at that in more detail. But it's unknown really at this stage.
Is that Michael by any chance? Seems Michael's always doing that when he's coming online. The other dilemma I could introduce here is I want to take an example where somebody set up a small business in January and maybe they've put a director's loan into that business of £100,000. Let's say it's a retail business. They've set it all up, they've got the staff in, they've got the stock in, they opened it 1st of February and it traded very, very nicely. All the locals in the town flooded in and it was all doing very, very nicely. And then on the 15th of March, the government said, you've got to close your doors. I said, well, hang on a minute, I've just put £100,000 of my own money into this business. You know, you can't legally tell me that you're going to close the doors, can you? And they say, yes, we can. But they say, what we're doing is we'll give you the opportunity to borrow 50,000 off us. Okay, so on Monday, the 4th of May, they go and put that 50,000 in. Well, could they then say, well, look, I put £100,000 in as a director's loan into this business, so I'm going to take that 50,000 that you've lent me. The business is going to borrow that 50,000. It's going to repay that director's loan. Now, would there be any restrictions on this? We don't know. So when the banks issue these loans, would they be issuing them with certain conditions that prevent that happening? Do they want to prevent that happening? At the end of the day, what they want to do is they want to get money into circulation. Does it matter if it's in circulation in the business bank account or in the personal bank account? So there's some unknown situations here, but one thing's for sure, it would be very doubtful that if that the banks are going to refuse this loan based on the fact that businesses have got overdrafts or overdraft facility. So if a business has an overdraft facility, then it's got debt. So, you know, they'll still loan on top of that existing debt, I'm pretty certain. So where do you draw the line? Can these loans be used by businesses to actually pay themselves, pay the directors, either by PAYE or by direct to loan or by dividend? And we don't know that yet, but I've got a suspicion that all of those things might be okay, might be green lighted on the basis that the overall intention of this is to get money into circulation. And I think it's going to be very difficult to say no to some elements of debt repayment when they're having to say yes to other elements of debt repayment. So we have to wait and see about that, as we have to wait and to see whether they allow property investors and landlords with investment income to be eligible for these loans. Any comments on that or questions? It's all gone very quiet. Rachel, anything from your side from credit? Can't hear you. Can you press space?
Right, I'm off mute now. Right, so a couple of things. I would say, I agree with Colin. I think that the lenders are going to look at the overall borrowing. And we have property business, but I would say we're not looking at this for a deposit for anything. We're looking at this, it can help us with our refurbs, which does put money back in and all that sort of stuff. So the other thing I would say is I've got a similar experience to Rupert, where we applied for we've not even got an overdraft in our business at the moment. So we thought, well, we'll apply for a CBILS overdraft. And not only have the bank been slow, ridiculously slow, the only thing I've heard back from them was them saying so not even telling me what, but saying you've actually got properties against your business on company's house, and obviously charges. And I'm like, yeah, we're a property, we're a property business. So each one, if they have a mortgage on, they've got a charge on the accounts. But the other thing that happened is they wrote to me last Friday, this was NatWest, and said, we will be anybody with a 50,000 or less CBILS application with the business meeting the right criteria, they'd be looking to move that or discuss the new loan. So instead, so I think CBILS will disappear for any of us that have applied in that smaller company bracket, and this will replace it.
Okay, so they've actually told you that those that are still under application are going to be shifted into the
definitely. And obviously, based on the 25% criteria, that will make people go up or down depending what you're going to do. In theory, what I would say is, in theory, the bank should just be able to offer this loan really easy. In practice, the big banks like Santander, RBS, they just can't, because they can't move. They're just stuck by legacy systems. So it's not, if they had somebody if they went back to the old-fashioned way and they had a stamp, right, literally, they could do it, but it's the legacy systems that stops them doing it. So I would say to everyone, don't expect this to happen in a week, because I don't think it's going to. I think it'll be like CBILS. There's going to be such a massive load of applications, it's going to be slow again.
I think as well that there was a wording confusion as well, where it said that the money will be within your bank account within 24 hours of acceptance, and some people have interpreted that within 24 hours of application.
That's 24 hours of acceptance, which may take 6 weeks.
Yeah.
Do you think there are banks which are sort of faster than the big ones? So I'm thinking, shall I apply somewhere else? Because
there is. I guess that is an option, because this is what I would say, and what I've seen with NatWest over the years is, you go to, if I've gone to NatWest, because all my stuff is with NatWest at the moment. I think I might change it after this, but all of my normal bank accounts and business bank accounts and different businesses that I've got. But what I would say with NatWest, which is sort of a nightmare, is they seem completely unable to not run a credit check on every single move you make, right? So, for example, the way their systems are set up is, if you go in and say, I want to not quite as bad as this, I want to increase my overdraft by £100 a month, they'll credit check you. And then if you said, I'm looking at whether I might apply for, they'll credit check you. And then literally they credit check you for everything. And that's the way their system is built to do things. So one of the things I see happening at the moment is, what they're not saying is, yes, it's workload for CBILS, but it's also that they can't sort of extricate themselves from the legacy system. Would you agree with that, Colin, on these big banks?
Yeah, I totally agree. I just don't know how well you're going to be received if you're a non-customer going to a bank.
Yeah.
And they're just going to start from scratch. I've got no ID for you. I've got no records. I've got no address, proof of address, and they're just as busy as the others, really. So I would have thought the easiest and only route is to go through a bank that you have a relationship with already.
I was wondering if there are, because I think we've discussed it last time I was on, that I found a secondary lender for CBILS. Because I got so frustrated with my primary lender, I thought, I'm just going to have a look. Yeah. And I found a secondary lender, and they would only kick in after you've been refused by the primary lender. And I actually spoke to someone, like, it was my primary lender, Santander, just sends me an email every week saying, we've got your application, do not contact us. Basically, and that is it. So every week they tell me to basically F off and not contact them. So I've spoken to the secondary lender, and I've spoken to them a couple of times actually. They actually looked through my accounts and they've asked me questions.
And that was a broker, wasn't it?
No, that wasn't a broker.
Okay.
That was an actual secondary lender. They are based in East Midlands because that's our area. And basically, there has on the case to provide funding to viable businesses which don't quite tick every box for the main lenders. And their interest rates are higher. I think their interest rates like up to 9% or something. But it's only if you've been refused. And they obviously told me that you can't have two loans. You can't have two applications at the same time and things like that. But I also was wondering if I could speak to a secondary lender. Is there maybe a primary lender that's been neglected that somebody knows of? No.
I wonder, Rachel, whether if you were to go to a bank other than your business bank, for example, my business bank for my property affairs is Lloyd's Commercial. If I was to go to a different bank to apply for this loan tomorrow, would there not be the obvious question from them, which is, why haven't you applied to Lloyd's Commercial?
Yeah, and I don't think even if you went to another bank, don't assume that's, so there is a workload thing here. So, I know you're just doing a survey, Rupert, say who on this call can apply. Well, I would probably suggest everyone on this call thinking of applying, because probably one of the reasons they're on. But the workload thing, but it's like all of these things. I was looking at Starling just before all this stuff kicked off, and I thought, I'll put my new business with Starling, because I was starting a new business, a new company, and they were like, no, we don't deal with new companies. So I'm like, now that means I've got to move one of my existing businesses and all the stuff that involves, because let's be honest. So I think if you'd done it before, perhaps, but I still think what Colin says is right, that you need to go to your bank. My bank can see everything that goes into the account, everything that goes out of the account, yada, yada, yada. They've got that history on you. I know somebody said they hadn't opened a bank account. I think this is a time for all of us as business owners to realise that putting stuff through the books is a really good thing to do. I think for property investors, most of us on the call, we know that anyway, because we have to if we're getting mortgages, you have to see it through. But all of this stuff, it's not just about the credit side, which obviously I used to work for the bureaus. It's as much about the bank's lending rules and how you look to that bank. And I would say all of that, our lessons coming out of this is, everybody should be putting at least the minimum wage through, probably PAYE, or at least a self-employment income. It's helped us because we've put stuff through PAYE. Andy's furloughed, I'm not, because somebody needs to run the business, but that's extra income that we wouldn't have had. So, I think there's an argument for all of it to say, stay with your current bank is your best bet for now. If there's anything you want to do, you need to do it afterwards.
I also think, Elena, that you actually no longer have the choice because of the CBILS application. The fact that the CBILS application is with Santander at the moment, and you will need that application to be shifted to the BB.
They'll shift it. They'll do what NatWest are doing, Santander, definitely. I'm sure all the big banks will. But
it restricts your options to Santander, in my opinion, as far as that's concerned. Has anybody currently been in receipt of CBILS, either overdraft or loan monies? Nobody at all. Well, it does actually show what an absolute failure the CBILS system was, in all honesty. I do know some people who have received monies from CBILS, but very, very few. So, anybody got any further questions on all of this, or anything else? Shane, you said, can you repost the link, please? Oh, do you not see the link on the chat, Shane?
No, I think you referred to something earlier about, I can't remember what it was now.
I can see it. There's 3 links actually. They're all, one's gone directly after each other, so I don't know if it's going to confuse things. Let me know. I'm going to post it again now.
Yeah, I can see that. I think
yeah.
if anyone's come in maybe after you've originally posted it, they won't see anything.
And Callum, are you on the microphone, Callum? Do you want to come on and ask a question?
Hi, yeah. I don't know if you've said it already because I joined a bit late, but what local authorities are providing grants to businesses that haven't registered for rates?
Yes, this is something we were talking about just before we talked about this CBILS loan, and it's something that's only been announced a couple of days ago, but has not been very highly aired. But basically, that the government have topped up the fund that they've given to councils, and they've given councils discretion to give further grants to businesses that have, and I'm going to read this out. This additional fund is aimed at small businesses with ongoing fixed property related costs. So the councils are looking at businesses that have ongoing fixed property related costs, which could be that you're renting a property for your business, or it could be that you are paying mortgage interest on a property for your business, but you're not under the business rates system. Okay, and it's discretionary, so the councils can, at their discretion, say no, or they can say yes, or they can say how much that they're prepared to give you. And my advice is use today to get your email to the accountant, so it's sitting in the inbox when people log on for work tomorrow morning. Because to me, this is going to be the case of being at the front of the queue. I imagine that the applications are going to be dealt with as and when they come in, and if the council decide to change their policy on that matter, you may have already been given the grant by the time they do. So it does put a few examples of those sorts of businesses: regular market traders, small charity properties that would meet the criteria for small business rates relief. But of course, as we know, that small charity properties don't have, are not subject to rates. But it also says, and bed and breakfasts that choose to pay, not choose, bed and breakfasts that pay council tax rather than the business rates, which draws into the question whether or not self-catering accommodation would fall under that category as well. Does that answer the question, Callum?
Yeah, thanks a lot.
And what's your situation? Do you think you're eligible for, or might be eligible for that?
No, I think some of my family's businesses might find themselves eligible where they've got say like the property held in a SAS, like commercial property, and they're renting it back to themselves. They might be able to benefit from that somehow.
Right. Colin, do you have any thoughts on that?
Sorry, I was not listening to that one.
Do you want to repeat that one to do with the SAS?
Yeah, so if you've got a business that you own the premises in a SAS and you're renting it back to your business, that might be something you'd be eligible for under if the councils are giving some relief.
Sorry, I don't have an opinion on that, Rupert.
I would have thought it falls under just a normal grant system.
Okay, I've tried to post those links again. It seems that when I post and nobody else says anything in between, it adds the next link to the first, and I think that's what the problem is. So if I'm going to do one again. Somebody, after I post this one, somebody just type anything.
Rupert, I've just tried to copy a link and it just won't copy. I don't know if anyone else is having the same problem.
Yeah, same problem.
So I'll just keep trying if you want to chat amongst yourself while I'm doing that. And if somebody just says hello in between each time I do, that might help. Okay. Have a go at that one where it says assets, stop publishing, see if that one works.
Won't allow you to copy it.
Ah, I've seen that before with this chat thing. I think, yes, yeah, I agree. I'll pop it onto the Facebook page. I'll do a post on the Unity Facebook group page with these links. But they're from the government website, and they're basically the amount of information that I've got, in all honesty. So it is scant at the moment. And the one thing, I'm going to say it again, because the one thing that is potentially the case is that we all go online at 9 o'clock tomorrow morning and we all go for these loans, and they turn around and say, no, that's investment income, that's not included. There is a chance that might happen. I don't think it will, if I'm honest, but it has happened with the CBILS loans. So, and I think that's where this particular loan is going to be differentiated, but I may be wrong, because, you know, we don't know. Why do I think it might be allowable tomorrow? Mainly because when they've introduced this scheme, they have actually listed excluded businesses, such as insurance businesses and banks and different types of businesses that will not be eligible for this scheme. They haven't said landlords or property businesses will not be eligible. So that's what makes me think that that there's a chance that we may be okay on this one. Yeah. Oh, we've still got 15 online. Does anybody have anything else you want to talk about, or any further thoughts? When do you think the schools are going to go back?
I heard that, aren't they going to phase it, so like just year 10 and year 12 for schools to start in somehow? I don't know how they're going to social distance in schools there.
It's almost impossible, isn't it? Mm.
Yeah, absolutely.
Will that be, do you think that will be in May, Shane?
I don't really know. Quite a lot of my friends and my family are all teachers, and they've not really been given any guidance, or the headmasters or whatever not telling them anything, because no one actually knows. And all the stuff we're seeing, I think it's just a little bit of hearsay. I don't know whether it's a bit of the government are maybe just throwing a few things out there to see how the public receive it, and then they're doing polls or whatever. Because I don't know how true it was the other day that 75% of people want the lockdown to just continue until it's completely safe, because you're going to get the people who are frustrated and want to get moving again, but they obviously don't want to get moving again if there's a massive relapse, because they'll just be crucified, won't they, at a government level. So I don't know whether it's just they'll drip feed a few things out, see what the feedback is, and then act on it in additional to the medical science. I don't know.
So I've read that everything is opening up in Spain in a week's time.
Yeah, I'm sure they've had their lowest fatalities today, haven't they? First for a long time.
René, can you give us some insight on what's happening in Germany?
About what? About the lockdown?
Yeah, just about general, you know, how it differs from the UK. What are your views?
Yeah, so I came to the UK because of the asset inflation. In Germany, you can get very, very cheap mortgages, so 0.8% and sometimes 100% LTV. And so the asset prices are growing. And if you step into the market now, you have net returns between 2 and 3%.
We do.
And in the north of UK, we have the absolute opposite. We have restrictive lending, we have high mortgage rates, but high returns. And so I make 3 times more money in the UK than in Germany. Mm-hmm. But most of my properties are bought before the big asset inflation. So I'm still all right with my profit. But if I would buy now, I would make between 2 and 3% net return. Mm-hmm. Yeah, this is the main difference between Germany and UK.
And of course, if we do see property values falling within the next 12 months as a result of coronavirus, that's going to put a lot of people in Germany into negative equity potentially.
Yes, I think the bubble is much more advanced in Germany than in, actually in London, the bubble is also there, I think, in the south of UK. But in the north of UK, you're still all right. The ratio between the rent and the purchase price of the property is still all right in the north. But in London and in Munich and in Zurich, I lived 6.5 years in Zurich in Switzerland. Yeah, so you get 2% return, maybe 3. In the countryside, maybe 4.5. But and I know many people who bought a portfolio within 2 or 3 years of more than 50 properties with 100 or 110% LTV. So they actually don't own anything. And if the interest rates would rise, or if the property prices would fall, they lose everything. All the capital payments are burned. And in Switzerland, I gave presentations about the impact of asset inflation and also about the UK market. And yeah, so many people are desperate in Germany because very high risk, very low returns, and very high leverage. I think it's not good to invest anymore in Germany.
So what about
you have a looming socialism?
Yeah.
So in Berlin, they not even freeze the rent, they even reduce the rent, and they expropriated some big companies. They get paid for their properties, but they have to give them away. So it's kind of socialism now in Germany.
And on the social front, you know, tell us a little bit from Germany. Do you have family there? Do you know what's going on during this crisis and what's happening with? Are schools closed? Are they reopening? What's happening? How are the hospitals coping?
Yeah, I have my whole family is dead, so I don't have any family, but I have friends there, and yeah, so they're starting to open everything. So, but it's a federal country, so in some parts of Germany you can do more things than in other parts. So it depends a lot. So they didn't want to open department stores with more than 800 square meters, but now most of them are open now.
Right.
They have a limitation how many people per square meter you can have. And, yeah.
And do you know what's happening with the schools?
Oh, I'm not sure. I think they're now opening yet, but it depends on which state. So in Nordrhein-Westfalen, near Düsseldorf, Cologne, they're opening right now, and in some areas not. So yeah. So I don't know. It's everywhere different.
Well, you come from a very nice part of the world, don't you? Down in Freiburg.
Yeah, it's a nice town. Yeah.
And yeah, one of our favourite places that we've been is here. And do you recognise? I doubt you would recognise it.
Titisee.
Indeed, you did recognise it.
No, I've been swimming there.
Well, congratulations! And this is one of the most beautiful lakes in Europe, right, very close to the source of the Danube.
Source of?
The Danube, Donau-Eschingen.
Ah, Donau. Yes, I know.
Yeah.
Yeah, but don't invest anymore in Germany. It's not worth. I think the German banks, they're actually the worst in whole Europe. Not the Italian. The Italian country is bankrupt, but the banks, Germany, they have the worst cost-income ratio in the whole European Union. The average cost-income ratio is 83%. So that means like 35% of the banks have already a cost-income ratio over 100%. That means that they're losing their equity. The equity is melting down, and they have to give a deposit to give away a mortgage. So if they don't have enough equity, the amount of mortgages will be limited, and this can lead into a credit crunch. Yeah, but I think the central bank will act against it by they're actually giving loans, or they're giving 100% guarantees for loans, and then they don't need as a deposit, the mortgage lenders. So if everything would follow the rules, Germany would face a massive credit crunch. But yeah, I think the Central European Bank will always find a way out.
Well, thanks for your insight there, René. And if ever we hear lots of people complaining about the UK, then I'll bring you in once more to the discussion, because it's good to hear it from this point of view perspective, isn't it? Anybody else got anything they'd like to talk about before we close today and get the roast in the oven?
Does anybody know the straight process if you're going to want to get rid of business rate when you're converting or refurbishing a big building? So I want to turn smaller flats into bigger flats, and can I just take it off the list, or do you need to go to the valuation office? Because
I think you need to contact the rates department initially, and I think you need to tell them what you're doing, and they will be asking you then for some evidence. And there's a certain point of which, when it's completely unusable, that it kicks in that you're allowed. So a small refurb would not qualify, but if you're making it completely unusable, then it can qualify. And I also think in some cases there's some time limits as well. So your first port of call is basically your local council.
Yeah, I think if I include a full rewire and replumb, then it's unusable.
Yeah, exactly. Yeah. But you need to be clear about your dates, get your application in early, in advance of doing it, and be clear about your dates, and also provide evidence of what you're doing.
Yeah, the dates are hard to guess because of the shutdown. So I don't know.
Well, you're in time. I mean, it can be retrospectively applied if need be, but you know, just contact them, contact your rates department, and ask them what their criteria is in the first instance. I do think it varies slightly from council to council.
Okay, thank you.
Good. Well, thanks, and good to see you all again, and thanks to those that haven't seen us before and come online. So we're going to go offline now, and the next Unity Cafe is on Tuesday morning. See you all.